still doing. Today I wanted to be able to show you one of the most important, in my personal opinion, most important thing. How is and what is top-down analysis? In my professional opinion, higher time frame narrative is much more important than lower time frame, as higher time frame has more structure and more power. And to be able to understand it, I have made a little document. This document right here. This is how to do top-down analysis. Firstly, why we as traders say that higher time frame narratives can why? Because the market moves in what we call fractal manner. Fractal manner. This is when whatever happens on the higher time frame, the daily, the weekly, the monthly, 15-hour, is usually what happens on the lower time frame. For example, market on the higher time frame respecting supply. Lower time frame, you can look to take supply trades which aligns with a higher time frame bias and target lows within the market. This is why we do top-down analysis, to give us a bias. The steps, the first thing you need to be able to do is firstly go into the weekly, then the daily, then the 10-hour, then the 4-hour, working down to the 5 minutes. This allows us to give us a more story and use it as confidence for ourselves. The market tapped into this. Now let's get onto the trade breakdown, the setup that we took. Okay, we tapped into this, what I call, this is our first POI. When the market tapped into this higher time frame on the 2-day and on the weekly, you can see that the market was very bearish. Multiple days of bearishness and little days of bullishness, which explain to me that potentially we are now oversold and looking to take buys. And then when you see, and then right here, once the market taps into that POI right here, it pushed up and it broke structure on the daily. It broke structure against this high. When it broke structure against this high, I knew that potentially we are now in a bearish market, as well as on the 4-hour, it disrespected this order block. When the market disrespects the order block, it potentially insinuates that we are now changing from for example, in this context, we are now changing from what was a bearish market into a bullish market due to this disrespect of the supply zone, and after that, the respect of this supply zone, which we call a swap zone. A swap zone is basically an order block which occurs inside an order block which was previously disrespected. In this case, the supply was disrespected and the market creating an order block inside that supply zone, which was the demand zone which the market respected. Then we go down to lower one, 2-hour, we see an order block right here which came up and broke structure against multiple lows, this low, as well as this major high, as well as fill some imbalance. Market tap back in, and guess what? We had a break of structure. Now within this market structure, I can see that we are starting to create what I call weak low pattern. Weak high, sorry, in this case weak high pattern. Market came up, broke that structure. Market tapped in, came up, broke that structure, keep on breaking the next high. So I saw this and looking to be able to take buys in order to take out that weak low, which the market's pattern looks to be able to already be taken. Let's just go back here. Okay, and we come down and market tap back into this order block. As when the market tapped into this order block, I was wait. Market tapped into this order block. However, this order block was too large because it was 18 pips, with which was disrespecting my risk to reward. Therefore, I patiently waited for the market to tap in and give me a little bit of thing. And when the market did, this is what it created. It created trend line, which increased the probability of myself. The 1 tap, the 2 tap, the 3 tap. Trend line insinuates to me in the market is manipulating the market, creating stop hunts for traders to be able to look at as an area of interest and then smart money use this the liquidity that the retail traders such as the support and resistance, um, for example, in this context, sells to be able to use that liquidity to buy. Now, potentially, I saw that now we are now in a bullish market. A smart money wants to buy. So I market tapped in, we were looking for opportunity, and the market came up and broke structure against many highs. It did not break structure against this one, which potentially looked to me as a target right here. As well as if you go down even to the lower time frame, you can potentially see what I call equal lows, which also increase high probability. More liquidity is even more better, which increases the validity of this order book. These equal lows, one tap, two tap, big push up. Now, two pieces of liquidity as well as market induced this Asian low, which potentially to me insinuates that now we can look to be able to take these trades, knowing that it is a liquidity induced order block, which is the highest form of order block in this smart money concepts and this industry, in this smart money concept field. Now, I saw this opportunity, I saw the break structure, I patiently waited. Market tap, patiently waited, patiently waited, patiently waited. Market tapped in, big push up. Now, I was market tapped in and the major bullish pressure. However, now looking at this zone, however, market did not tap back into the zone. Top down analysis. All of this started from what? The higher time frame. It's all started from the higher time frame. We saw the market tapping here. Then we go on to the lower time frame. We saw the market being broke that structure, as well as disrespected that supply zone, as well as broke structure. We go down into the lower time frame. We see the market also respecting that breaking of the highs, creating weak lows and inducing them. Go down into the lower time frame. We see the market induce liquidity. Same way on the higher time frame. Same way in the higher time frame, liquidity right there, the market induced the liquidity and pushed up. We go down into the lower time frame, we see market creating opportunities with major bearish pressure, exactly like the higher time frame. What I understand, got to understand within the market moves in a fractal manner. Whatever happens on the higher time frame is more than likely to happen on the lower time frame. If there's weak close being created on the higher time frame, breaking of the highs, we can potentially look to be able to look on the lower time frame, see if there's any weak lows that we can look to target. And there was right here. The market tapped in and tapped out, giving us a 1 to 9.8, round it up to 10. As simple as the top down analysis is something every single individual in the SMC field, in the supply and demand field, must understand. You've got to understand how to be able to go from the monthly all the way down to the 5 minute and be able to use the higher time frame as confluences. I don't take trade whatsoever on the higher time frame, the 4 hour, 10 hour. I only take it from the lower time frame right here. If, for example, this 20-minute order block, market tapped in, minimal drawdown and major push up and induce these highs. As simple as that. I also have a Word document inside the comments where I go all over this in Word format, in the writing format. So make sure you all go check the comments below and see it. That's as simple as that. How to do top-down analysis is one of the most important things in this field. Make sure you guys go down and be able to look at the Google document. I do all of this by myself, so I would appreciate if you guys subscribe, potentially like, and as well comment. Thank you very much.